Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept and welcome to this week's look ahead. We've got a jam-packed calendar this week, lots of high impact risk events coming our way. So make sure you're paying attention because there's definitely going to be some fantastic opportunities coming our way. Starting with China's manufacturing PMI, which is due out overnight. It is expected to be slightly worse than previous, and this would feed into the narrative that China is starting to slow. Now this is important from a risk on, risk off perspective, because if this does come in worse, you can expect safe haven currencies to strengthen, but it just depends how the market reacts. So make sure that there's a correlation between the data and what the market's doing so that you know that the market is focused on the data, which can give you a real lead in terms of what to do in currency land. Next up on Monday, we have UK manufacturing PMI, US manufacturing PMI, and we've also got Draghi speaking. It's unlikely his tone's going to change that much from recent speeches, but definitely keep an eye out on what he has to say. Pick the bones out of the speech in case you find some real gems in there that can give you a heads up about what to do with the euro in the coming days and weeks. The next major risk event is the Australian cash rate, followed by a statement by the RBA. They're not expected to change interest rates, so the statement is key, because within the statement you'll be able to understand whether the sentiment for this pair is considered positive or negative going into the week. Clearly, Australia faces some massive headwinds if China continue to slow. So this then brings back into focus what happens at the start of the week with China manufacturing PMI. These two things need to be watched very carefully, and then, as I said, watch the stock market for confirmation, because if the stock market starts to crash, safe haven currencies will strengthen. The next big risk event is UK construction PMI and New Zealand's GDT price index, along with the unemployment change and unemployment rate, followed by Governor Wheeler making a statement. Again, watch the statement closely and pick the bones out of whatever he says to give you a read on future direction of the New Zealand dollar. Sentiment, however, is weak for this pair, as the last statement suggested further easing in terms of monetary policy towards the end of the year. But of course that can change quickly based on global events, especially China. So again, make sure you keep an eye out on China overnight, because if it's bad for China, it's bad for New Zealand. Moving forward into Wednesday, we've got Australian building approvals, Australian trade balance, Japan's BOJ crude oil speaks, which is super important given the fact that Japan have just cut interest rates, pound services PMI, ADP non-farm employment change, and ISM non-manufacturing PMI, followed by crude oil inventories. On Thursday, the focus really is the ECB President Draghi speaking. Looking ahead finally to Friday, we've got the RBA's monetary policy statement, followed by retail sales out of Australia, and then of course, with it being the first Friday of the month, we've got Canadian unemployment change, but the big news is non-farm payrolls, which is expected to come in a lot worse than previous, with the unemployment rate remaining at 5%. Watch out for hourly earnings, as an increase in this and an increase in non-farm payrolls will be considered positive for the dollar, and is always a key indicator that the Fed are keeping an eye on regarding interest rate rises going forward in 2016. To get analysis on all the pairs I'm trading and all the traps I'm considering, click the button below to join me for my live trade room. Have a great day, and I'll see you there.